The third scheme of investing is based on past performance. A firm advertises how successful one of its funds has been in the recent past.
The other myth is that there's some way of picking managers in advance or picking managers for the future based on what they've done in the past. There is absolutely no evidence that performance persists over the long term.
Here's an example of track record enticement. This full-page ad ran in the November 2000 issue of Money magazine. Tech stock's still hot, and it displays a #1 ranking and 5 stars. Why? Because in 1998, the fund returned 196%, and in 1999, it returned 216%. Interested? Of course. So in 2000, this is the product to advertise. However, if you responded to this advertisement, added it to your portfolio, it did a negative 51% in 2000. Fogg researchers could not find any full-page ads for it in 2001. Maybe we missed it. Or maybe the new numbers didn't make it an attractive advertisement.
For individual investors, you've got to keep the long-term focus.
Jeremy J. Siegel is professor of finance at the Wharton School, University of Pennsylvania. He is a market historian and best-selling author of Stocks for the Long Run.
Do not be impacted and influenced by psychology at the time.
The average professional investor, the guys who run mutual funds, they are turning over every stock on average every year. They're getting in and out, in and out, in and out, and what they're doing is they're all following each other in hordes and in flocks. They're not evaluating rationally. They're running with the crowd.
Try not to follow the herd. That's so important when you're making decisions.
When pitching past performance as acceptable advice to the investing public, every commercial, print or electronic, and every prospectus is required to run disclosure with language similar to this. Past performance does not guarantee future results.
The real disclaimer should be actual manager performance has zero correlation with what they're going to do in the future. And then that should be right on the very front of the prospectus so every single person can see it. Of course, it's not.
What people confuse in the investment community is luck with skill. All of these guesses are no better than a monkey throwing a dart at a board. The markets are random and efficient.